I bet a lot of you have heard that phrase that data is the next big oil, especially around the time that Palantir was doing their direct listing. And that's actually a phrase that I agree with because data is becoming more and more valuable as our internet presence grows. Now, in my ADD mind though, when I hear something like that, I immediately start thinking outside of the box and I started to think of what can be data's kryptonite or what can really be the pain point when it comes to aggregating so much data. And really it boiled down to hackers and cyber attacks. Well, that then led me down this long rabbit hole of looking at all these different companies and what should I talk about next. And I feel that cybersecurity is going to be another huge area. So today we're going to talk about some cybersecurity stocks. Hey everyone, and thanks for joining me today. My name's Matt. And before we get started with this video, I just want to say this is not financial advice. Please don't take this as financial advice. If you do need advice, please go speak to financial advisors. They can give you the direct advice. This is just for your entertainment purposes only, so don't make any decisions based solely on what I say. Also, I want to mention that this video is going to be a little bit different. I know I say fairly often that I'm not a huge expert in this area, and unfortunately, cybersecurity is another area that is just not one of my areas of expertise. Now, I say this because I would rather than just kind of picking one of the stocks out of the blue and trying to sell all of you on why I made that decision, I wanted to take you through my thought process on how I start to learn about stocks in areas that I'm not necessarily an expert on so that I can make smarter investment decisions, and hopefully you'll be able to take some of my strategies and use this towards your own investing for areas that might be a little foreign to you. So I say that, just bear with me here today because we actually have 3 stocks that we're going to be taking a look at today. And we're going to start by looking at their numbers. Now, before we jump into the numbers, I do want to say, I know I did BlackBerry last week, and a lot of people do view them as a cybersecurity company. But this is really a space that I feel you can have more than one company's exposure in, and it might be beneficial to own a few different cybersecurity companies. So that's why I'm doing it kind of again this week with another cybersecurity stock. Now, I did pick 3 stocks to review this week, as I said earlier, and the way that I got to these 3 is I just kind of was looking at what analysts are saying, reading some news reports, and the 3 that came up the most frequently with the most positive news around them were Okta, sorry if I'm not saying that correctly, Zscaler, and CrowdStrike. Now, I'll start off as always with the beta. We can see that both Okta and Zscaler have a beta below 1, meaning they're less volatile than the market. So that's good for me to see. Even with Zscalers being at 0.82, it's not a stagnant stock, but it's not one that comes with a lot of volatility. And I tend to like those stocks a lot, especially as a buy and hold investor, because if you're truly going to be a hands-off approach and hold on to it for the long term, I think having less volatility just makes that a little bit easier to stomach in the long run. CrowdStrike, though, we can see that one doesn't have the beta because these are 5 years beta, and I don't believe CrowdStrike has been a public company for that long. And rather than going through these next ones individually, we could see for both the price to sales as well as the price to book ratios, these stocks are considered overvalued just from these 2 metrics. Now, these are just 2 metrics and they don't really paint the full picture here. So there's also discounted cash flow analysis, and that's what I actually prefer when I do pick individual stocks to kind of help determine what the fair value or what I believe the market value of the stock should be. I'm not going to do that for 3 stocks though because that would take hours of work to do. But as we can see, 41, 49.96, 48.92 for those price to sales, that is pretty high. Let me see what the industry average is for these companies just so I can help put that in perspective. All right, so I couldn't find exactly what their price to sales was that quickly, not to take the time, but the price to book average for this industry is 8.2. So that again, 47.86, 50.01, 47.21, these are significantly over the industry average. Now, usually that could turn off a lot of investors, and admittedly, that was a hard pill for me to swallow when I was looking at these companies. But I also understand the growth that's coming with cybersecurity right now, and ultimately I do believe it makes sense for these companies to be trading at somewhat of a premium, given how big cybersecurity is. Also, if you look at the discounted cash flow analysis, I know at least Zscaler is a little bit undervalued in that regard. So it's just kind of why it's important to look at multiple different aspects rather than just looking at some of these simple ones like price to earnings, price to sales to make that final decision on if this is a stock you're going to buy. So premium, yes, but is that going to steer me away? Not yet. Revenue growth, this was encouraging to see, especially after seeing some of those valuation metrics, because all of these companies are growing their revenue, especially CrowdStrike. Theirs is at 85.87% year over year, which is almost double what Zscaler and Okta are doing. So again, that is something encouraging for me to see, because if I'm going to trade if I'm going to buy a stock that's trading at a premium, I do want to make sure that at least there's other indications that it's worth paying that premium for. And generally, revenue is a good area for me to look at for that. And even if we look at the EBITDA, now this was a strange one for me. I will admit that, because let's look at Zscaler, 404.77%. That is incredible. And in case you're new here, because I know I've gotten a bunch more subscribers, so thank you, all of you, for subscribing. I've said before, but again, just in case, EBITDA is a non-GAAP measurement. Don't worry about that. It essentially just measures cash flow. So it's earnings before interest, taxes, depreciation, and amortization. So I'm a big cash flow person. You've probably heard me say that at least a million times, if not more. So the 404.77% is an easy thing to be like, yes, that's the one. But it's significantly higher than a lot of its competitions. And CrowdStrike's is negative. CrowdStrike's is 40.95%. So while that initially made me think, I'm going to go ahead and buy Zscaler, I just wanted to do a little bit more research before making that final decision, just based off the one metric. So as much as I love that very high EBITDA, it's just a little strange to me because it's such an outlier. And sometimes, as I've said before, you really got to look under the hood when you see outliers like that to help fully understand why is that EBITDA or why is this metric significantly better or worse than what the competition is doing. But as we could see as well, Okta as well as Zscaler both have really good quick ratios, 4.68 for Okta, and Zscaler's is at 3.66. CrowdStrike's isn't bad either. It's at 1.76, and I believe they're probably the youngest of these three companies, so I don't expect for them to have the strongest balance sheet, especially given that they're a little bit newer, but it's still over 1, and it's pretty close to 2, which is still encouraging for me to see as an investment. Well, now comes the moment of truth of which of these stocks do I feel is going to be the best to add to the portfolio. And admittedly, I don't feel these numbers really paint the entire picture for me to actually make that informed decision. It rather just paints a portion. As I've said before, I like to also see what management is doing with this company. And I'll admit, I didn't have the time to listen to 3 earnings calls this week and see exactly what I like about the management. You know, when they were founded, how many times have they changed ownership, how long has their leaders been in place, all of that good stuff. And that is stuff that I usually do but don't always talk about on my channel. And again, I just didn't have time for that this week. Also, given that I'm not really an expert in cybersecurity, it just made it, again, a little bit harder for me to really pick which of these is going to be the best performer. So I decided to go with an ETF instead. And the ticker symbol for the ETF I went with is IHAK. That's IHAK. So let me explain to you. The reason why I chose IHAK is because probably the biggest reason is because all 3 of these companies are inside the top 10 holdings of this. So we'll get exposure to all 3 of these companies, as well as a few other companies I saw in there that caught my interest, like DocuSign. Also, I'll just pop up some numbers here for IHAK so you can see this with me. Their AUM, $179 million, almost $180 million, is not necessarily the biggest ETF out there, but it's no small one either. And it's actually one of the largest cybersecurity specific ETFs out there, which is something that I like because to me, just having more money inside that fund, again, offers a little bit more of a security for me. The expense ratio is also the lowest amongst some of the other cybersecurity ETFs out there at 0.47%. I really like to keep those expense ratios below 0.5%. I know, especially if you're investing in ARK funds, it's not always possible. But having this one be below 0.5%, especially because I believe this is an actively managed ETF, gives me, again, just a little bit more comfort. I think that's like the 5th time I said again, so I'll try not to say again. A dividend yield of 0.73%, that's great. It's a nice added bonus for it, but I'm not buying into this for the dividend. This is definitely going to be more of a growth play for me than an income play, and I think cybersecurity still has a lot of room to grow. So the dividend, again, nice added bonus. If we could potentially reinvest those, it would help grow into this position. But for the time being, I don't really care too much about that dividend yield for my investment purposes with this. It has 47 holdings in it, which is something that I like to see because it's not too much to manage, but it's also broadly diversified enough to where nothing's too hyper-focused on one position. Because I do believe once you get over like 70 positions, and it gets really hard for those fund managers to keep track of all of those positions. So 47 is kind of in that sweet spot for me, especially for an actively managed fund, not an index fund. Now, the turnover ratio, 44.93%. Again, this is an active ETF, so you should see that higher turnover ratio. I can't say I'm the biggest fan of it because it could hurt performance if you're doing too much frequent trading, but since this is an ETF, not a mutual fund, we don't have to worry about the tax consequences of that higher turnover ratio. So that was fine with me. So what I'm going to do is I am going to add iHack to the portfolio again, just because it has the 3 stocks in it that I was interested in. It has the lowest expense ratio among its competitions or similar ETFs, and it's one of the larger cybersecurity ETFs. And I do believe that if you're not an expert in an industry and you really don't know why one stock is going to be better versus its competition, why not just buy the market and just see which one's going to do the best? Even if it's just a small position to start off in, that at least allows for you to get the exposure in this industry, and then you can worry about the details as you own it, but you're not going to miss out on any potential gains from this industry because you're stuck studying which one is going to be the best option. So I'm a big believer in buying ETFs when you're not an expert in an area, and then do your research from there. But at least for that time being, you'll still have the exposure. So that's why I took the ETF route. And again, I'm more just here teaching you my thought process on what I do when I don't know a whole bunch about a company. So that said, long rant, let me pull this up here and I'll be right back with you. All right, and I actually did remember to take a screenshot this week, so these numbers shouldn't be changing us as we go through it. So for iHack, I bought 65 shares of it, and you'll see that's actually just a little bit of exposure compared to what we typically do. I only bought $2,500 worth of iHack because I don't want to put all that I have into it right now if another opportunity or if I find a cybersecurity stock that I really like a lot better. So I started off with just shy of $2,500 in it. It's already made us $5. And with that said, I do have a little bit of a surprise here. I actually did also buy Zscaler. That's why I didn't put all of it into it. So I bought about $2,700 of Zscaler, and it's doing very well for us so far, but it's only been a few minutes, so it's nothing too crazy. Zscaler, I'll pop that up so you can see it, is up about $17 for us, where iHack's only up about $5.86. I don't ever expect an ETF to really outperform buying a winning stock, but again, it offers me a safety blanket when it comes to areas that are just a little foreign to me, if that makes sense. So just a quick look here at our portfolio. ARQ up $846. Great. BlackBerry's down a little bit for us. I kind of expected that because that was a little bit of a gutsy move. Comcast up $61, and DR Horton still trending down, so one of these days I'll get around to checking that one out. Etsy is just absolutely killing it for us, up $1,800. Very happy to see that because, as I've said almost every week since I bought it, that one had me nervous, and it's good to finally see that one paying off. iHack, we already covered that. Pinterest is up $500. I think that's actually down from last week. I'll have to double check that, but I think Pinterest might be heading down. So, maybe if you want to take Jim Cramer's advice and try to lock in some of those gains, might be a good time to do so. ChargePoint is at $2,854. So that one's creeping up on a $3,000 gain. But that's another one that seems like it's been staying a little stagnant these past few weeks. So something I'll just have to look into. Maybe the whole EV boom is going down. Probably not. People love EVs. Smile Direct Club down $60, keeping it strong. That one also, that might be my new Etsy. That one has me a little bit nervous. That and DR Horton have me a little bit nervous. And then we have Zscaler, as you see, up $17. So, as I always say, portfolio headed in the right direction. We're not going to have 100% winning bets like we did when I first started this series. But I still am comfortable with the way that this is headed in. And I do feel what I should do from this point is actually look more into some of these cybersecurity companies, because maybe Zscaler is not the one, but we'll just take our quick profit and maybe buy into something different. That just is a more time-intensive process, and when you're short on time, or when I'm short on time, this is how I approach still doing my best to make sure I learn about these companies to the best of my ability, and then I'll start digging through the earnings calls and digging through like previous reports or all of that good stuff. So with all that said, I hope that you enjoyed this video, and I hope that this gave you a little bit of insight as to how maybe you can approach industries that you're not familiar with but want exposure in. This is how I do it, and I don't want to take away credibility from myself by always saying I'm not an expert in an industry, but I just really feel a lot of people out there talk about stuff like they know everything about it, and maybe they do, but a lot of times it seems like they don't. I don't want to be that person, and I want to make sure I'm being very transparent and clear with all of you, because I want you to be able to learn how to become a smarter investor, and that's my main goal with this channel. So thank you so much for watching this video. I know it was kind of different, but I hope you enjoyed this format. If you liked it, I don't know what to say. If you liked it, give it a thumbs up maybe. And if you haven't subscribed already, we're like 4 away from 500. And I think I was saying 400 like 2 weeks ago. So I'm super excited about that. And thank you to all of you who are new here and have subscribed. And as always, for those of you that have been with me for a while and have suffered through many of my rants. I'm going to stop talking here though, so thank you so much for taking the time out of your day to watch this video. You could be anywhere in the world and you're right here with me, and I super appreciate that. But I'll let you go ahead, enjoy the rest of your day, and we'll see you next time.